What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock, what you should be looking after for the future. I'm also going to break down why tomorrow is going to be an absolutely massive day for Tesla, for the stock market, for the economy, as CPI is coming out. So I'm going to let you know everything you need to know about CPI, when on earth is it actually coming out, exactly what time, what many economists are saying about CPI, and also what the projections are essentially suggesting for the future, and how this may affect Tesla's share price and the markets going forward. Now, before I break anything down, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is you could always sell these 12 free stocks for cash and use that cash to buy some Tesla shares for free. It's a limited time offer. The offer ends in just 3 days. Check it out before they run out. With that out of the way, let's get on with the video. So looking at Tesla right now, Tesla's up 1.58% for the day, a little bit green in the after hours as well. And Tesla has been doing pretty darn well if you look at the daily time frame. Now, there is something very important you have to note, and that is, from a technical standpoint, Tesla does look bullish. It looks like this thing wants to continue to push to the upside, but it is actually very dependent on CPI as well. So if we ignore CPI for a second, please note that we're pushing up. We have some very nice looking candles. We did get hit by strong resistance at 305, like I mentioned yesterday. And as far as where we go for the future, I'm going to talk a little bit about that later. But right now, OPV is pushing up. RSI is looking a little bit better. And the MACD and RSI are both suggesting the same thing, that we're pushing to the upside. We're about to get that signal line and MACD crossover, once again looking bullish. So everything's pointing in that direction as of right now, but it also depends on the news, and that's what could kind of change this. So the real question is, what's going on with CPI? How may this affect Tesla? And that's where I really want to focus from this point on. So right now, the market's very correlated when it comes to Tesla and SPY. Both of them are starting to push up. And we are getting some analysts out there saying that Tesla looks pretty good, and they are actually giving it some buy ratings. Many research centers such as Wolf Research and big banks are saying that. But right now, for the short term, as amazing as Tesla is, CPI is what matters very heavily, because this is going to affect everything. So tomorrow, the data for August 2022 is coming out, the CPI report. It's coming out on September 13th, 2022 at 8:30 a.m. Eastern Time. And the CPI just measures the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. It's basically a major inflationary measure, right? And what's very interesting about it is it's very heavily weighted by energy. Energy makes a big sector. It really makes a big impact on how on earth this actually moves. And another big thing about CPI is it is actually going to affect the Fed policies to some degree, because Jerome Powell did mention that they are going to move based off data. So we want CPI to start coming down. We want CPI to actually come and approach that 2 to 2.5% rate. And that's what the market would like to see. And if it does come down, that could be a good sign. So right now, many analysts out there are suggesting that CPI is going to drop from 8.5% to 8%. The last time it came out, it was 8.5%. So we want to see it go down. But what is the data actually suggesting when it comes to claims being made like this? If we look right over here at the monthly supply of new houses in the USA, you will notice we're seeing a big increase in supply. This is because demand is actually dropping like crazy, as the price of houses are basically being managed in a way where they're going to be coming down. This is similar to what happened in 2008. It's like a managed version of 2008. It's not going to be as like severe when it comes to unemployment and things like that. But what I'm trying to say is, this is going to be very important, because now that this is going up, the prices are starting to go down, because mortgages don't have the same demand as before. As mortgages are going up thanks to the federal funds rate and the Fed policies, this is actually going to cause housing to go down, which is good for CPI overall. Now, if you look at the data right here, if you look at the US all grades, all formulations of retail gas prices, you'll notice something very interesting. So in 2020, April, this is when it reached its low point, and it slowly started to go up. Then in 2021, we started to see this go up even more and more and more. Then by 2022, we saw a huge spike, particularly in June, and started to go down since then. But what's very interesting about it is in July it came down, and it came down a little bit harder in August. So that's another good sign. So look right here for June, the average cost per gallon in the USA for retail for gas was $5.03 for June. For July, it was $4.69. And then for August, it was about $4.09. So you can see there was actually a bigger decrease between July and August than there was between June and July. That's a good sign that CPI is going to come down pretty well, in my opinion, especially as once again, it's heavily weighted by energy. Now, what else is very interesting is many big Fed officials are saying they expect CPI to also come down as well. Goldman Sachs chief economist is also saying it's going to be another soft report. Not to mention that the New York Fed is saying the same thing. They think it's going to fall again. And once again, that's going to be pretty good for the markets. And if we look at other big analysts out there, the same thing is being mentioned again. Now, when it comes to the specific details, we don't truly know to what degree it's going to come down until the data comes out. And the data is kind of like all over the place. Some people are saying it's going to come down to like 6%. Others are saying 6.7%. Some people are saying 8%. I want to show you guys a projection I found from a very credible source. And this is actually very interesting because if we assume that CPI peaked in June, just like this, you will see this peak like this. And if we are actually respecting a downtrend, if the forecasts are suggesting that, we're looking at July, we're seeing it come down. And if the trend kind of like continues in this direction, then we would anticipate it to come down even more. So right now, the projections appear to be very likely, and we're using a confidence interval of 67%. It's most likely going to come between this range right here. That would be between 8% and like 7.6% or so. So once again, a pretty decent decrease. I want to actually talk about how this could affect the market going forward. So just to make it clear, anything above 8.5% would be horrible. The market is going to crash if we get something that high. And I just want to make it as clear as possible because that's what we got last time. 8.3 to 8.5%. I'm mentioning these higher numbers because some Fed officials have kind of like given some estimates that are still kind of high. So that would be pretty bad, anything like within that range. For 8 to 8.3%, that would be just okay. I wouldn't consider that great. And the market may kind of respond not in the best way, even if it's above like 8%. So that's something to really keep in mind. Now, something that's pretty good would be anything between 7.5 to 8%. That would be pretty good in my opinion. And 7 to 7.5% would be actually good, actually pretty awesome in my honest opinion. And anything below 7% would be very good. Anything below 6.5% would be great. But in my honest opinion, we're most likely going to see something between here, closer to the middle. So my target would be about 7.5%. That's where I think it's going to be. And I do think that could be pretty good for the markets. Now, and when it comes to the reaction of the markets, it's more likely the market responds positively for the short term. This could actually help both Tesla and the SPY and the overall market push to the upside. Now, as far as support and resistance levels go, if we look at SPY, very similar setup as Tesla. It looks pretty bullish short term, but this doesn't mean it's going to last like for the next 3-4 weeks. It's very dependent on the Fed as well. So I want to actually bring back many of these key zones for the SPY. What I'm going to watch for is that 413 range. That's a very, very important zone. We've had lots of chop in that range, 413 to 414. And I can show you guys, like I mentioned earlier, there was a time where the Fed traded sideways between 410 and 413, maybe like 414 as well. We traded sideways here. Then we had a big rug pull and we came crashing down. But right here, this was more recent, there was another instance where we traded sideways in the same range for quite a bit of time before we broke to the upside. So it could go either way, but it's very important to see how we react in this like 409 to 413 range. It may be like 414 as well. So be very, very cautious when it comes to trading in these zones. And for Tesla, very similar story. Let me show you where that key zone is. For Tesla, we've actually had many instances where Tesla would move kind of sideways. Right here, we had lots of chop, but right here, we pushed up to about 314 before getting a big rejection coming down. And there are other instances where Tesla has a lot of like volume nodes that are very strong around here, and we end up getting these like rejections in this zone right here. So I'm not saying we will get rejected. What I'm saying is there's a lot of action right here, and this is the key zone to really watch for. So for me personally, once Tesla, which I think it likely will break above 305, if it does that, please watch around like 309, 310. Very, very key zone because we can see a lot of chop there. Even if it breaks above that, then up to like 314, there's a lot of chop in these zones, lots of sideways action, lots of resistance. So I do think that this could actually slow us down a bit depending on who really has the edge. And I think that CPI will be very telling of what really happens from there. So, what I anticipate is CPI, if it comes out really bad, the whole market could dump. Tesla could come down like this, all the way down pretty hard if it's too bad. But if CPI ends up coming out like pretty all right, and things end up like okay, and maybe it's like bullish as well, Tesla could push to about 309 and break past that, then 314 is on the table. So be prepared for those numbers. I think upside is more likely to come, but please note when it comes to this upside, all right, it's awesome, it's amazing, but I can't guarantee it's going to last because we have FOMC coming out for next week. And depending on what the Fed announces, depending on what the Fed ends up saying, that could also affect us because even if CPI comes down to like 7.6%, 7.5%, I can't guarantee that means that the Fed is just going to just throw their hands up and not really do as many hawkish things as before. They are still going to have to be hawkish, in my opinion, to really keep inflation down, to start bringing it down because their policies alone are not the main thing that causes it to go down. It's the effect of them. So please be very, very mindful of these key zones. It is possible to get a rejection or we could kind of push up, but we first have to visit them first to really determine how choppy we end up being. So please be prepared for anything. I'm more bullish than bearish for tomorrow based off what CPI is suggesting, but I'm not confident that this bullish move we're making is going to last for the next like 3 weeks. We'll have to see what the Fed also does in response and what announcements they make as well. With that said and done, thank you all so much for listening. Be ready for tomorrow. It's going to be a very important day. And once again, let me just remind you with the data right here. Energy makes up a big category in CPI, and the report is coming out tomorrow at 8:30 a.m. Eastern Time, 1 hour before the market opens. Please be ready. Let's hope that it does come down because that's going to be a lot better for the markets. And like I mentioned before, we're most likely going to get something around here, in my opinion. My target is about 7.5%. So hopefully we get that target. Hopefully things go well. And if that's the case, right, for the long-term future, this would be a lot better for the markets, for the economy, because we are showing some progress. And hopefully we start to see inflation come down like this and start to downtrend for the next upcoming months. With that said and done, thank you for listening. Have an absolutely great rest of the day. Be ready for tomorrow, and I'll see you guys in the next one. Tesla to the moon because the long-term future is bright, and peace out.